The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 29th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call the law of attraction. You know, you're probably familiar with the phrase, success breeds success. I believe that to be true, and each of us can achieve this outcome, but we must use 2 laws of the universe, which are the law of inertia and the law of attraction. Now, the law of inertia states it's easier for something in motion to stay in motion. That's really why I always suggest you take action, but not just action, massive action. That really gets that inertia moving. And the law of attraction, well, that states that like attracts like. This is really important to understand. You see, the law of attraction deals with the attraction, well, between ourselves and things like other individuals or places or conditions or basically everything we want in our lives. You know, said another way, we manifest into our life that which represents our thoughts and our beliefs. The law of attraction, well, it functions like a boomerang, bringing back to us that which we project unto others. Something to think about. That which projects onto others, either good or ill, which means we have 3 options to attract things into our lives. 2 of these options, well, I consider these to be super easy. That which we like and that which is like us. Attracting these things into our life, super easy. All we have to do is become the person we admire, and our inner success, well, that'll take care of our outer success. The difficult option occurs when we encounter things we don't like. Surprises we don't like. Because if we focus on what we dislike, guess what? We'll attract that into our life, and that, folks, never leads to a good outcome. You see, the universe is constantly testing us. It's what I call the pitch and catch game. Each day, the universe throws something at us, and then we catch it and throw something back. And this pattern goes on and on and on. However, it is at the moment when the universe throws us a pitch of negativity, is what we'll call it, that we must really be on our game. We've got to be on our game to neutralize those experiences and as quickly as possible. I found the easiest way to do this, well, it's to refrain from judgment, or better yet, find the good in every situation. Yes, look, I know that sometimes that is difficult, if not downright impossible. Downright impossible, but impossible, as you and I know, is simply the untried. So when things are difficult, all we need to do is ask a better question, because if you ask a poor question, you're going to get a lousy answer. So when you are struggling, you're just not asking a good question. I know it to be true for myself, and so that means it's true for you as well. So here's a question that you can write down. You can use this throughout the rest of your life. You can use this if you got kids. You need to be able to use this on them all the time. And that's this. Especially in a bad situation. Instead of asking, because you might say, hey, how can I find any goodness? That's usually what you'll hear from folks. So ask this question. If there was some good to come from this horrible situation, what could it be? You see, the cool thing about asking a question that way is that it presupposes that you can find something good. And presuppositions, they're good things, folks. Find the good is what I say. Find the lesson, then throw that back to the universe. If you do that in the pitch and catch game, guess what? The universe has to respond to you by attracting that which you want in your life versus that which you don't want. That is how you win the game of life, folks. And you know, I like to say, something to think about. Success, it does breed success. And that's called the law of attraction. Well, let's go check out the law of attraction in these markets out here. Right now, we've got the Dow futures up 16 points, trading out at 15,534. S&P up 1.5 points, trading out at 1760. NASDAQ up 4 points at 3387. Russell 2000 up 2 points at 1118. King dollar on the move this morning. It's up 26 ticks, trading out at 79.57. So that means we've got some movement in the marketplace, in the euro, in the pound, in the Japanese yen. We'll take a look at those currencies. In the hard currency marketplace right now, the Goldilocks, that's back about $5, trading out at 13.47 and a bit of change. Silver trading at 22.52, basically flat session. Light sweet crude down 71 cents, trading out at 97.97. Across the globe out here right now, over in Europe, you've got the FTSE up 38 points. That is trying to break out over that resistance zone. We took a look at that yesterday. We took a look at it on a weekly chart out there. So we'll take a look at it again today. The DAX is up 23 points as we speak right now. Mixed bag over in Asia last night. Nikkei down 0.5%. Not a big deal, off 70 points. The Hang Seng up 40 points, up about 0.2%. And the Shanghai down 5, about 0.2% on the way down. Our call-in number, 877-927-6648. So where do we begin? You know, if you're watching us on Tiger TV, you can see 4 quadrants on my screen here. Those happen to be the intraday charts of the currency pairs. The upper left hand is the U.S. dollar, Japanese yen. Upper right, Euro, U.S. dollar. Bottom left is the Euro, Japanese yen, my favorite currency pair. And on the bottom right, that's a Great British Pound, U.S. dollar. We can take a look at those currency pair patterns that are out there, see what we've got setting up in the marketplace. Now, these are patterns that I drew in, well, quite frankly, late last night, working with my daughter on a school project out there, and so had these patterns drawn in advance. And that's the beautiful thing about these Gartley buy and sell patterns out there, is that they're really leading indicators, so you can draw them ahead of time. They don't always pan out. They don't always pan out, meaning that price does not always get to them, but ahead of time, if you know what it is that you're looking for, your little fishing hole, it makes it a lot easier to trade these markets. Our call number is 877-927-6648. If you give me a call, I'll be happy to take a look at your stock chart. Let's start off by taking a look at the U.S. dollar, Japanese yen. Again, it's just the intraday chart. We show these just simply because it's so much easier, because they occur so much more often. And this will work on the longer-term charts as well. So we're taking a look at the U.S. dollar, Japanese yen. We can see here, coming to the time frame, yesterday at about 1:30 in the morning. Was it the 25th? I'm sorry, it wasn't yesterday. It was the 25th. On October 25th, that was a few days ago, you can see as the U.S. dollar, Japanese yen had pushed down, got into that extreme oversold territory, utilizing that 14-period relative strength indicator. Saw a nice little bounce up. It was a 0.382 retracement. That's coming off of what I call X marks the spot. X marks the spot happens to be the swing point high, where we really saw a change in trend. That would take us back into the time frame of about 8:30 in the evening on October the 16th. So from that high down to low that was put in at right around the midnight time frame or so on October 25th, that made a 0.382 retracement. And then what did it do? Then it went ahead and retraced, and it only made a 0.382 retracement to the downside, coming in about 9 o'clock in the evening, and that was last evening. And with that only being, you can see also here at about 4 o'clock this morning, you saw a bit of a test there. But you see, we had a nice little bullish engulfing candle. And if that is the only retracement that it did now, and that's what it's turned out to be, well, maybe this pattern that I have drawn here, which says that the U.S. dollar, Japanese yen moving up to 98.30, maybe that's really not the pattern that's going to unfold. Because if we take a look at A to B equals CD, that's what we're going to draw in on the chart here right now. You'll see that's only a 1-to-1. A to B equals CD. That's going to complete around the 98, 31-ish, 32-ish level. Nice 2.6 expansion of a set of swing points. But you can see here, price moving up pretty nicely out here. And as I take a look at this pattern, I say, you know what? Even though that's the pattern that Stevie-san put out there in advance, I'm looking at this and saying, nah. You know what I think this is going to trade up to? Maybe more like 98.55. Now I'll wait for the bulls and bears to actually show up in the marketplace. But if we go from that swing point high in this intraday pattern down to the low out here, 0.786 takes us up into about the 98.55 level. And that looks more likely the outcome. So we'll leave this on the screen here. Who knows? Maybe even by the 11 o'clock time frame when the Money Master show is over, we'll have a better idea as to where this pattern is going to trade up to. But right now you can see here also moving into an overbought condition. So what the market ought to do is move a bit sideways or so. And so it's going to really be, if in fact that's what it does and works off this condition, it'll really be that which gives us the signal as to whether or not this move here is more likely to complete around 98.23 or 98.55 out there. If we just move sideways or a light pullback to work off that condition, that says that 98.55 is on its target range out there. So that is on the U.S. dollar, Japanese yen. If we go take a look at the Great British Pound U.S. dollar out here, we can see that this is about to complete the 0.618 retracement, the 0.618 Gartley buy pattern. That's to complete right around the $1.60 area out here. Of course, what I need to see is a couple of other things, such as a bullish reversal signal that holds. We have not seen that as of yet. And this big, wide-ranging bar right here, this is the one that took place at 8:30 last evening. That's the one that says, okay, these candles need to get nice, small-bodied candles as they come into this $1.60 level. Because if they don't, it's a hard landing. And a hard landing says, nah, we're not going to stop at the 0.618, even though you've got nice Fibonacci numbers. Instead, it would head even lower, 0.786. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
That it is, folks. Futures still up a bit, and we're going to go over and take a look at the Euro Japanese yen. That is my favorite currency pair. Why? Just simply because of the direct correlation to the U.S. stock markets out here. And right now we can see the 30-minute chart here. As this currency pair makes better patterns than any other currency pair out there. We had a 0.618 Gartley buy pattern that formed here late yesterday. About 9 o'clock in the evening, nice little bullish engulfing candle. That area came back and was tested throughout the evening. Then about 6 o'clock this morning, another nice bullish engulfing candle forming out here, and it's been off to the races. Now, when we say off to the races, this thing here has already gone ahead and made a 100% move of a move. Normally, when you take a look at the Gartley pattern, your outcome is a 0.618 retracement of your A to D point. Well, we're beyond that. We're beyond the 0.786, of course. It is getting into what I call the rubber band has stretched. It is sufficiently stretched here, and it would not surprise me to see this, not only surprise me, let me tell you what the expectation is. This currency pair must start to trade sideways here for a bit. Again, it's a 30-minute chart that we're looking at, sideways to pull back here. So with the futures being up, it actually suggests that we see futures open up, a little bit of selling pressure that takes place in the market. We'll see if that selling pressure takes a foothold out here. And that's just simply with regard to the correlation. Now, the correlation here, it's not a tick-for-tick meaning that one tick equals X number of ticks in the ES Mini or something like that. It's a directional correlation that is out there, and that's what is just simply most important, because what you don't want to see is divergence. And right now, there is no divergence in the marketplace when I go ahead and take a look at what the futures are doing, and as well as what the Euro, Japanese yen. That just means I'm tightening my stop on my futures trade, since I'm in 3 of them as we speak here right now. And in any event, I'm tightening my stop because of yesterday's action in the market, quite frankly. So some cautionary signs that are out there. And that's what my expectation is of the market, at least with regard to this currency pair. Now, if we do go take a look at the futures, let's take a look at the daily chart, see what they are doing out here. What we can see here is that the Dow here, it's flirting again, and it wants to get back, and it wants to test that high at least one more time. That's the September 19th area, that yellow box that you're looking at. In essence, that's a consolidation zone. Look, it can be lifted higher or lower, but this is basically the consolidation area that is out here. If we see a close above 15 to 658 inside the Dow, I'm telling you, folks, that suggests a breakout of the consolidation. Now, what is likely to happen if we are to see this? Well, what would likely be the case, we'd see it close above 15,658. This is the futures that we're looking at here. That would make us say, this could be a 1,000-point breakout. Now, ideally, you'd see a pullback into the top of the box of that consolidation. You'd like to see at least 3 tests, but we'll take 1, we'll take 2, and certainly we take 3 tests, because if you get 3 tests and it can't get back inside there, there's your 1,000-point move to the upside. So we're just going to have to wait and see how this plays out here. But right now, this morning, we are seeing that flirt with that area. If I switch over into the intraday chart here for the Dow futures, let's go take a look at this. The only thing that I was able to do out here was to try to identify a trend line. And that trend line coming off of the market turn that we saw back at 11:30 in the morning as it made a low on October the 9th. And I'm just using, from a trend line perspective, I'm using the low of that trading session. I'm using the signals that came down around the 11:30 area yesterday. Now, I drew this trend line in here yesterday. When you break a trend, when you break a channel, price will try to get back inside it. And so, interestingly enough, out here, again, this was put in yesterday. Don't tell me, I can't tell you how this works. I just know that it does work out here. And we can see that we did have the Dow futures really break through that area. Did it at 7:30 last night. Formed looks like a little hammer candle out here. That was at 9:30 in the evening. And now all we've really seen is a test of that trend line out here. So if, in fact, the Dow can get back above that, the Dow futures that we're talking about here, that would be positive. That would say, okay, we're going to go ahead and test that 15,658. That's the high, taking us back into September 19th out there. So that's on the Dow futures. We want to be paying attention to that. Of course, we want to be paying attention to how Apple trades right now, and that's been all over the board. Right now, it's up $7. Let's go take a look at Apple. Go take a look at yesterday's action out here. And we know that Apple has a confirmed A to B equals CD. Come on, where's the chart? There we go. That pattern was not violated or anything yesterday as well. So that says 572.26 is written all over it. I say if we're going to have an A to B equals CD up, 572.26 is not the extent of the move inside Apple. I'm thinking more like 606, 636 out there. That'll get some, if you're short Apple, that'll get that sphincter muscle to tighten quite a bit out there. We'll see how it's going to trade. It was all over the map after hours yesterday. We'll be right back.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 45 points, trade out at 15,615. S&P's up 5 at 1767. Composite up 14 points, trading out at 39.54. Russell 2000 up $2.70, trading out at 11.20. Apple up $5 and change. A lot of volume behind this stock here at the open. Haven't been trading for 5 minutes. We already have nearly 2 million shares in that $500 range out there. That's some bucks changing hands. You've got Actavis, ACT is the ticker symbol. They're up $7.50. That's up 5%. Tableau Software, DATA is the ticker symbol, up 5% as well, $3.49. Netflix up $2.40. Pitney Bowes up 10% this morning. That's up $2. They must be out with earnings. PBI is the ticker symbol. Pitney Bowes total revenue is $938 million versus $949, so missing on the top line. Their Q3 a loss, $5.5 million versus a profit of $76 million from the prior year. Interestingly enough, man, what is it that these guys are forecasting out here? In any event, their stock is trading up. Sears Holdings, SHLD, that's up 6% this morning. Nutrisystems, I haven't looked at that stock. I used to trade that back in the 2006-5 2005, 6, and probably 7 time frame. So we'll go take a look at, just for old time's sakes, NT. You write that down just in case I forget to do that here. NTRI is the ticker symbol. So Nutrisystems and Hanson Natural were two of my favorite stocks to trade back in that time frame. Michael Kors, that's up $1.59. That's up 2% this morning. Icky Bank, IBN, that's up 4.5%, up $1.56. To the downside, we've got Cummins Inc. Off 7% this morning, down nearly $10. Volcano Corporation, little lava flowing out this morning. It's down 18%, off 458. You've got AGCO, AGCO, down 6%. That's about $4. PACCAR, PCAR, off 4%, $2.50. Dana Holdings, DAN, down 10%, off $2 and change. Commvault Systems, CBLT, that is down about 2.5%. You've got what else? Nothing else large. American Capital something or other, AGNC, that's down about 7% this morning. So let's go start checking out the markets here. So here's the Apple chart. You can see big volume in this equity. Today is going to be very important. If we switch back over to the daily chart out here, you're going to see pretty big volume so far, 3.5 million shares in just the first 7 minutes of trading. Yesterday's volume in total was 19 million shares. So Apple is going to help it's going to help lead the charge to the upside, or it's going to put some pressure on the markets. Can't tell which one here just yet, but what we do know about Apple, it's got a confirmed A to B equals CD up, and that takes it to the 572-ish range as its first target out there. Let's go take a look here at the actual index. We want to really be paying attention to the Dow itself. So, the futures, we know that they're up at the top of its range. What the Dow needs to do is get up to the top of the box. We're going to say the top of the box right around the 15,658. You're at 15,614. So that's another, 40 points or so out there. And, of course, what you're really looking for is a close above, a test of 15,709.58. The question is, can it get up there? Should be able to get up there because you're already above the 0.786 retracement of the last move down. So should have enough energy to at least test the top of the box. If not, test the actual high from September 18th. That would be 15,709.50 out there. Now, a test of that area and then to start to move sideways, or a test of the consolidation and not breaking back inside it, that would be very, very bullish. 1,000 points worth of bullishness inside of that move. So we'll be keeping a close eye on that. In the meantime, let's go take a look at some of these stocks here that are popping and dropping. So I do want to go take a look at Nutrisystems. NTRI is the ticker symbol. Let's see if there's anything behind the move out here. If they were out with numbers, let's see here. They were out with some numbers. They did 85 million versus 81 from last year for their third quarter. Net income 356,000 versus 252.59 million. So they're getting hammered here on the bottom line. Nonetheless, let's take a look at this equity. I think I need to update the stock chart out here. It looks like some pretty good volume. This can't be right. Oh, man. I may have to go to Plan B out here. I don't know why I've got a bad I guess some file looks like it's corrupted or something out here, because there's no way that yesterday was just that candle formation. Well, let me do this. Let me try to erase this and come back and try that out there. Now, well, we're not going to look at Nutrisystems. I'm not going to do that live. I'll come back and we'll take a look at it. Sorry about that, folks, and not going to switch over to another piece of software just yet. Let's go take a look at Sears Holdings, SHLD out there. All right, so Sears Holdings, that is up about 9%. I saw something flying across my screen earlier about maybe separating the property out there, the tire and battery locations. Didn't get a chance to read on that. Nonetheless, let's take a look at Sears Holding here. This thing had recently made a swing point high back on October the 1st, 1.6 million shares out there. You're trading inside that level, coming into it with some good volume this morning, already 317,000 shares. Sears Holdings should test that high, $66 even, Steven. If it can close above that 66, that would be setting up and confirming an A to B equals CD up. It had this real strong resistance area, but it was able to close out that window, and that is that downdraft session from May 24th, 2013. I'll get it out, don't worry. It repaired that window back on September 12th when we saw it close above the low of the gap down from May 23rd out there. Let's put this thing on a little bit longer-term time frame. get a better feel for what Sears Holdings here is doing. So really just consolidating. It's been making lower highs out here. So where is Sears going to run into some trouble? Probably at that trend line, maybe at a channel line out here. Let's go see where that would take us to in Sears. So the channel line resistance is pretty much right there. There's the channel, the blue lines that we're taking a look at. So it looks like Sears ought to go ahead and test the high of October 4th. I wouldn't be surprised for it to test the high, get above $66, and likely reject that area. But right now it is still in a downtrend price channel. In order for the trend to change on Sears, it'll need to break through that price channel. Also need to break through that red trend line out there. If it can do that, then that would say something to think about when it comes to Sears Holdings, SHLD. Let's go take a look here at Cummins, Inc., leader in the clubhouse on the way down. CMI is the ticker symbol, gapping down, doing so with volume here this morning. CMI, let's see what this is doing. This has got a breakout session where it's traveling into as we speak. That's from July the 30th. Wide price spread, accelerated volume. That was on July 30th, so we've got a little bit of a breakout there. Of course, what it has to worry about is if this thing really gets some selling pressure, and it does look like it's got that. If this area here from July 30th fails, where price will move all the way back down to much lower, 103.41 to 106.20 or so, taking you all the way back to May 1st out there. That is on Cummins, Inc. So it's breaking a swing point with volume. That is the trading session from October 9th. It has not broken a swing point with volume in quite some time out here. It did so back here on this trading session. The swing point was on April 18th. That had 2.5 million shares, and it broke that with 4 million shares. But it immediately reversed course out here. You can see what it did was it gapped up on this trading session on the May 3rd out here, came back, repaired that window, came back with a volume of about 4.2 million shares. So there's some strong support out here, and that strong support with inside of Cummins Inc. really, I don't know why. I'm just trying to find out why. Why is this area here being supported? I can't really identify it here off the top of my head. But this thing here, you got to be careful with it because it does have this high volume low back in July of 2012 as well as back in October of 2012. And it's breaking to the downside with volume. That is volume off of the top for sure. Cummins Inc. Let's go take a look at Volcano Corporation. VOLC. VOLC is the ticker symbol, down 20% with volume. Let me go see what these guys reported out here. Can't be anything good or positive, that's for sure. They have I see a downgrade alert. I do not see anything other than a downgrade alert. Wow. This thing here broke out, had a nice breakout session, Volcano VOLC, on the trading session of August 6th. Now, for this equity here, not the most liquid of instruments, did 2.5 million shares on its breakout. You're trading now below that last breakout. Had a nice sign of strength, a nice high, a high volume high that has not been tested. That is from September the 17th. So with the exception that this thing is now breaking apart today and doing it with some volume, looks like this thing will end up finding some kind of trading range out here. Oh, I take this thing back. It's not that great. Let's put this on a weekly chart. So I always got to pull these things back or take a look at larger time frames out here. So as we do that, let's go take a look at the channel line that this thing is in, see if we can identify that. Looks like probably right about there is the number, and then I'd have to say right here probably to the downside, somewhere right around there. So it looks like this equity here is going to head down towards the bottom of its price channel. That should take it back into that swing point level. From May 10th, I'd say the 1671 or a little bit lower was on the following trading session around 1637. Looks like that's where Volcano is headed to, still in its descending price channel out there. Let's go check in on the commodity sector out here. Let's go see what we've got going on inside Goldilocks and silver. You've got gold really with a sideways trading day. Now, yesterday it formed a doji candle. There's a doji in my window, and you don't necessarily like to see that coming into a resistance area. And we'll call it a resistance area because of this evening star formation out here. So the last real bearish candle configuration that gold is trading up into right now happens to be this three-river evening star patterns, three-candle formation. It was a large up-thrusting day on September 18th, little doji candle that formed on September 19th, and a down bar, wide-ranging bar, got more than halfway into the trading session from September 18th. That says you're up at resistance. The real resistance is 1375. That's why a close above 1375.40 would be bullish. Right now, you got a doji that was telling you, okay, buying is waning out there. That's what we see. We're seeing some leaves fall off the tree here today. So far, looks like it's not too bad. I would say that a buying opportunity, quite frankly, on gold would be a pullback here into this 39-day exponential moving average. That price level right around the 1328 level. So if gold moves back right around 1328, 1329 and holds, that actually would be bullish out there. If it breaks through that area, well, then that says, okay, it's going to go back and it's going to test the swing point low out here, which was put in on October the 15th. But the doji, not to be unexpected because you're at a resistance level. Now what we want to see here is we want to see gold price. Well, if you're long gold, I'm long gold. So I want to see gold be able to take out that resistance level. That means now a close above 1361.80, and then, quite frankly, a close above 1375.40. Now we can go wipe our foreheads and say, time to move to the upside inside Goldilocks. Silver, a little bit different pattern out here as we take a look at silver. In this case here, no doji in the window out here. It is running into a bit of resistance. It tagged the low of September 19th. That also is a three-river evening star and a bearish engulfing candle as well to boot on September 20th. So silver does have some resistance up at the 23.44. Continuation move inside silver is going to be a close above 23.45 out there. So if you're long silver, high-ho silver, that's what it is that we are looking for. We take a look at light sweet crude out here. That was pulling back just a bit. We know now light sweet crude yesterday getting up to a high of 98.57, close enough for me to test the $99 area. Thick black line going across my screen. That is the resistance of that 1 year consolidation band that light sweet crude broke out of. Came back, got back inside here. If it can't break out of this, light sweet crude will head down into the $85 range. If it can't bust out the top of the consolidation, it'll move down to the bottom of the consolidation. I would expect it would find a bit of support, which it did, at the 0.68 retracement off of the low to the high out there. That price objective was 95.78. It actually got down to 95.95 out there. Man, you got to like that. What did it miss it by, less than 20 cents out there, about 18 pennies or so. So not too shabby on light sweet crude. It's got a bit of support at around 93.92, but then 91.31 would be the next move. We'll see. Now, if crude can break above $99, then we might really be in looking at a real breakout. And, of course, this thing would run into some resistance at that trend line that has so far contained the light sweet crude. That's coming off of the low from April 18th. And your next touch point out here, I would just use the low of June 24th. We take a look at bonds, see what bonds are doing. Somebody's got their thumb on bonds again. Here we go. We've got now, 4 trading sessions for sure. 1, 2, 3, 4 trading sessions with a narrow range candle, a small-bodied candle out there. I thought it was amazing to see that type of price movement right back here for 10 days or so. Maybe we're in store for that. Well, maybe we're in store for at least another day. Today's Tuesday, yeah, so tomorrow, Wednesday at 2 o'clock, I believe the FOMC will release their minutes out there. Maybe then we'll see some movement in the 30-year Treasury. 877-927-6648. Be right back.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Let's see, we've got the Dow up 49 points out there. The S&P is up 4. Composite up 5 points as well. Russell up 3.5. Apple up $2 as we speak right now. Let's go check in on some of the other core holdings out here, see what we've got going on. We've got, there's our Apple chart. Volume inside Apple so far this morning here, 6 million shares in only 24 minutes of trading. So we've got some volume inside this equity, unless this thing gets back inside the lower part of the range, meaning back below the B point, which is the August 19th level, 513.74. We'll just have more of a confirmation of the A to B equals CD up inside of Apple based on the volume that we are seeing inside of the equity here this morning. Let's take a look at Google, see what it is doing. Google here just working off some of that overbought condition. Wouldn't be surprised to, if Google can close inside the October 18th high, which is 1,015.46, wouldn't be surprised to see it come and test its lows out there at 976.58, but nice looking stock chart for sure. You can see here the volume on any pullback here has been pretty light volume, so Google looks pretty good. That $1,000 equity. I just got to make a tab for $1,000 equities. Priceline, Google, obviously inside of that. Let's take a look here at IBM. IBM now is inside. This is positive here. You've got IBM now inside the descending price channel. So it's back inside that. That suggests that IBM wants to make a run to get back inside, to try to attempt to get back inside the long-term consolidation that it broke out of. I suspect that's going to hold as a resistance area. That is the 182-ish range out there. In order for the Dow to break out, though, and make that 1,000-point move out there, we will see IBM actually get back inside of that. And I suspect it would run into, that means above the consolidation zone, and that would look like run into the descending price channel that it is traveling within. So this is the first real positive sign. No real volume here yet today, 500,000 shares, but it is positive to get back inside that rising or that descending price channel out there. Let's take a look here at Intel. You know, now this thing is just motoring on up. It's got the 1-to-1 A to B equals CD, which was confirmed on Friday. Let me update the stock chart here, get some volume behind it. There we go. So this thing here actually picking up volume on its move up. So 2466, which is the 1-to-1 A to B equals CD. Actually, if we take a look at it, here's the volume that you want to really be benchmarking Intel on, and that is coming back here to the downdraft session from June 20th. I'll use a red line coming across my screen. Look at it's inside that swing point, and it was taken on yesterday with volume. Very, very bullish now when we take a look at Intel. Of course, the SOX index was able to stay above the consolidation zone with Intel down at its lows recently back in August, as well as the lows back here in the beginning of October out there. So very bullish for the semiconductors. Now, Texas Instruments, that was an equity my subscribers and I were in. We took a profit on this. Did we know we ended up getting stopped out? Texas Instruments here had pulled back. They had some nice earnings out here, but the street didn't like what it saw and pulled back into October 23rd with a bit of volume. But yesterday, also having a nice breakout. So this thing, trying to get above. Let's see if it did do this yesterday. The swing point out here, September 19th, 5 million shares. It got above it yesterday with 11 million shares. Okay. So now you got Texas Instruments. That's got an A to B equals CD up. The small one here, 41.79. It's trading out at 41.31. But the semis out there, they are doing well. Man, time flies. Folks, if you're off to start your Tuesday, have a terrific Tuesday. And otherwise, I'll see you in a few. Take care. Have a great day, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.